Hello, chart watchers, and welcome to this Thursday, May 16th, 2019 Market Watchers live show with your host, Tom Bowley and Erin Swinlin. For those of you joining us for the first time today, welcome to the show, and for our regulars, welcome back. Well, the market is continuing its trek higher. Dow Jones Industrial Average currently up 281 points. The S&P 500 up 38. The Nasdaq up 117. The Russell 2000 up 18, all of which are at highs currently for the day. 10-year Treasury yield also bouncing off of that 2.36% yield support level we talked about yesterday. The move back up in the 10-year Treasury yield, of course, means money is rotating out of Treasuries, and that is helping fuel today's equity rally. Volatility index making a big push down, fifth time in the last 6 days. We have seen volatility drifting lower. We are back down into the 15s. I think that's very bullish, taking out the low that we saw about a week ago. Leading to the upside today, really it's a wide participation advance. All 11 sectors are higher. Last time I looked, 8 of the 11 were up more than 1%. Materials, healthcare, technology among the leaders, as is financials. Within the financial sector, a couple of favorites. These are a couple of groups that have been doing really well, even though financials have been underperformers overall. Financial administration and the specialty finance. These are two areas that have been doing very well, and they're starting to regain their strength, which I think is a very good sign. Another group that is regaining its strength is the telecom equipment companies. This is a group, and I'll show you a relative chart in a bit, but this is a group that was underperforming for a period of time, but is starting to show some really good signs here. And one of the reasons, Cisco came out after the bell last night with a very strong report. Talked about this one yesterday and the fact that it was still leading on a relative basis within that telecom equipment group, and we found out why. Market loved the report. We're now back up above key moving averages and not too far away from moving back up to that April high. NetEase also bounced higher in the internet group, also posting results that the market seemed to like. So a big move up on NetEase as well. All right, geez, Erin, I tell you, the market a week ago, I wouldn't, you weren't sure if you wanted to touch anything. And now just a few days later, it's like the market can't, people can't get enough of it.
Well, I think a lot of people were waiting for a pullback so that they could get back in. I don't know how long this will last. I think it's a pretty nice rally off of that low, but I will reserve judgment. I'm still in the market myself, but we'll see if this is going to be something a little bit long-lived or short-lived.
Yeah, I think we're going to see consolidation. I just think we marked a pretty good top there at the end of April, early May. And having the volatility index spike the way it did just a few days ago up into the 20s, I think it hit maybe 23 or 24 at the high on an intraday basis. Those types of readings in a bull market, I believe we're in a cyclical bull market. Mm-hmm. Those types of readings on the VIX generally mark short to intermediate term bottoms in a secular bull market. So I think the bottom that was set just a few days ago is going to be a very important bottom. And when you look back, the Dow kind of went back to that 25.5 area where it was back at the end of March. The S&P got back close to 2,800, which is where it was at the end of March. And that was on a high volatility spike as well. So I think those lows that were just set, I think are going to be really important going forward to hold. And in the meantime, I think we're safe as long as we continue to consolidate off of this uptrend in between those recent highs and lows. And that's what I would expect to happen now after such a huge rally that we had to start 2019.
Yep, that makes a lot of sense. I can agree with that.
Yeah. Well, and speaking of agreeing with, we're going to be talking later. Of course, you'll go over the schedule here in just a minute, but I do want to just let everybody know that we have a poll out there today. We're going to look at the Nasdaq 100 stocks. And I know Erin is going to be talking about some of the worst, I think the five worst scooter ranked stocks in the Nasdaq 100. And we're going to give you the opportunity to chime in on which one of those 5 stocks you believe, if you had to buy one of those 5 today, which one would it be? And we'll find out if you agree with me and Erin later in the show. But Erin, why don't you take it away?
Yes. And I've made my decision. I thought it was fairly clear. So I'll be curious what everybody else picked, including you. All right. Upcoming schedule. Tomorrow, Mary Ellen will be in for What's Hot, What's Not. Tom has a workshop on Tuesday. Larry Pesavento will be with us on Wednesday. And then Mr. RRG, Julius DeKempener, will be with us on Thursday next week. All right, today, like we were saying, we're going to do a dissection of the Nasdaq 100 based on scooters. 10 and 10, the first symbol will be Glue Mobile, GLUU, and then we're going to finish off the show with sector rotation. All right, Tom, let's take it away and get it started.
All right. Well, first thing we need to do is take a look at some of these economic reports. And remember, yesterday we had the April retail sales number came in very weak. The industrial production came in very weak. Capacity utilization came in very weak. The market didn't like any of that. And, well, at least the Treasury market wasn't a fan of those weak economic reports. A lot of folks going into Treasury sending the yield lower. Today, we get the exact opposite. We got some really good reports in. Initial jobless claims came in lower than expected. April housing starts and building permits both came in above expectations. And March numbers for both of them were revised higher. And then finally, we had May Philadelphia Fed survey came in better than expected. And all of that resulted in a move back to the upside, effectively trying to reclaim what we lost yesterday on the 10-year Treasury yield. So looking at that chart, you can see right here, we are up about 2.5 basis points. We're up over the 2.40 level. Yesterday, we hit a low of 2.36 and change. I think the low back at the end of March was 2.357, something like that. So effectively, we got a double bottom in play. Now the question is, can we make this push back up and eventually take out 260? Because now I think this is the range that we have to watch from an intermediate term perspective. Do we get back through 260 first, or do we break down below 235 first? That's going to have a major impact on some areas of the market, especially the financials. So we'll have to kind of keep an eye on that and watch and see. All right, earnings reports. There were a number of earnings reports out last night, a couple big ones. Cisco Systems, you can see, beat on their bottom line. NetEase, a huge beat on their bottom line. Going down the list, some of the other names, next couple were smaller, but then Walmart reported this morning before the bell. They came in better than expected. Some of the revenues weren't quite so great, though. Cisco beat, NetEase beat. Walmart actually came up a couple billion short, or maybe about $1.5 billion short, 122.9 billion versus 124.5 billion expected. So top line on Walmart came in a little light. Other than that, though, I think the reports were pretty good. And I think the stock market, there for a while, there was hardly anything coming out in terms of economic news and earnings reports. And so I think a lot of the focus became U.S. and China, the trade war. Now it seems like the market's getting more focused back on some of the economic data, some of the earnings reports. And as a result, the U.S.-China trade wars kind of dropped off to the side. Volatility's come down, and the stock market is reacting pretty solidly. Let's take a look first. I'm going to go ahead and pull up this Cisco chart and look at it on a relative basis and talk a little bit about what I mentioned yesterday. So on the chart, you can see that Cisco was moving lower, but volume was not light, and there were a number of hollow candles in here. I think 7 of the last 9 days had hollow candles. And what that means is that you're closing above the open. And now, a lot of these we had gap downs, but then we would come back up, rally by the end of the day, and finish higher than where we had opened. And to me, even though we're going lower, that's a good sign of accumulation, at least something to consider, one piece of the technical puzzle. But when you look at these relative charts, first of all, you can see telecom equipment finally breaking out of this slump that it was in for about 3 or 4 weeks, moving solidly to the upside. But look at the leadership that Cisco was showing before the earnings report. So even though telecom was going down, and even though Cisco was going down, it was going down slower than the overall group, meaning that on a relative basis, it was outperforming many of its peers. Then we get the earnings report, the market likes it, and you can see the reaction back to the upside. Today's volume on Cisco is already over 20 million shares, 24 million shares actually, and we're not to the halfway point of the day yet. So we're looking at potentially 40, 50 million shares, maybe even more. And when you look back over the last year, it doesn't happen too often. So this kind of a huge hollow candle on very heavy volume tells me there's a lot of accumulation taking place in Cisco today. NetEase. NetEase also had pulled back recently. I think I mentioned yesterday that it would look better on the absolute chart, but it didn't look as good on the relative chart. And even with today's move to the upside here, and we are gaining on a relative basis, we have not broken out. So NetEase, yes, it was a good reaction. It's not a bad stock, but it's not one of the better stocks in the internet space. There are others that are performing much better. And so between the two, I had mentioned I thought that Cisco looked better than NetEase, and I still would still feel that way based on the way these two are trading after their earnings. A couple of others. Let's take a look at Walmart. Walmart did come out this morning, like I said, fell short on their revenues, but they did beat on the bottom line by 11 cents. The market reacting positively, but we've still got some overhead resistance to deal with. I think that really what we have is a prior uptrend. I'm going to go back a little ways on this. Let me just go to a weekly chart here on Walmart. But if you go back and you look at this, I see a move up followed by a very lengthy ascending triangle. So if this ultimately can break out above 105, 106, I believe Walmart could be in for an extended run to the upside. But I'm willing to give it the next $2 or $3 to see whether or not it can make that breakout. On this weekly chart, you can see it has been performing extremely well, holding above that rising 20-week moving average, which is well above the 50-week. I think Walmart looks really good, but I'm not interested in buying it right up against resistance. I either want to see that breakout or maybe another pullback to that rising 20-week moving average. That would seem to make more sense to me. DDS, this is one, Dillard's, that I'm going to go back to that relative chart. But on Dillard's DDS, you can see this move down. We're testing a major support level, but look at the relative strength. Now, this is the broadline retailers, which have been doing well. And if you look relative to the S&P, the broadline retail group has been rising for the last 3 months or so. But Dillard's has actually been going down to new relative lows with their earnings report today. You can see it breaking to a new 52-week relative low. This, I think, is just another example of why you want to continue to monitor the relative strength of your positions. The market is telling you something. I mean, you can look at it and say, well, you know, it was going up. Well, it was going up and it had that one little spike there, but overall it was not outperforming its peers or the S&P 500, and that is normally a sign I don't want to be involved. I want leadership. I don't want stocks that are lagging. Okay, I want to pull up that chart on the, I'm going to pull up a couple of these first. Let's pull up the financial administration chart. Here you can see after getting to 50-day test, and this was a higher price, lower PPO. I think we needed a reset, and we needed a 50-day test. We got it, and now literally 3 days later, this group's ready to make another breakout. Very, very strong performance there. PayPal is a stock that's been doing very well in that space. Specialty finance, same thing. Negative divergence. We went back, 50-day test, reset the PPO, or nearly resetting, and now we're starting to turn back up. Not quite as strong as the financial administration index that we just looked at, but still moving back up through the 20-day, which is good. And then the last one I wanted to mention is the telecom equipment group. And look at this, after not performing well for a while, quickly moving back through these moving averages, which I think is very bullish. And if I compare this to the S&P 500, and I'm going to go out weekly, and let's just go back the last few years, and of course don't want a candlestick chart. If you look at this, this has actually been a group that when it pulls back, it gives us great opportunities to get back in for that relative strength run to the upside. Telecom equipment's been on fire now for about 18 months. And after this recent pullback, I think the weekly relative strength chart still looks pretty good here. Okay, Erin, upgrades, downgrades, what you got?
All right, let's get it started with Avalon Bay, AVB. Avalon Bay Communities was upgraded today. Let me get that information for you here. Let's see. All righty, yes, Robert Baird upgraded AVB neutral to outperform. They moved their target from 198 to $215. Certainly looks like a good chart to me. You've got a symmetrical triangle. Those are continuation patterns, and we're seeing an upside breakout right now on the upgrade. And notice the PMO is just about ready to get us a buy signal. Next one up would be Macy's. Not sure why this one is upgraded right now, but everybody's got their ways of analyzing. But Macy's was upgraded from a sell to a neutral. So they're moving into that neutral position. They're done shorting it. But, I'm looking at this even on an upgrade, and you're getting a breakdown. Notice the PMO is topped below the signal line. And this, my friends, is a weekly chart. So we could see prices move all the way down to $16. So yeah, personally, not very tasty to me. All right, next one up is Mohawk. Mohawk was upgraded today by Stifel from a hold to a buy. They moved their target from 135 all the way up to 180. So when you look at that 180, I always am curious when they set these, where that lines up. Pretty much right on this resistance level formed by those lows back in July and August of last year. So you've got a PMO that has managed to give you that bull kiss, came down, maybe faked out some folks who sold, and now it's turned back up on the momentum. And it looks pretty good on this very short-term breakout. Just watch that 145 level. So I thought Mohawk looked pretty good on that upgrade. Owens Corning was upgraded today, and it was upgraded, let's see. Actually, Owens Corning, I apologize. Owens Corning was a downgrade, but let's go look at the last upgrade, which was Scorpio Tankers. Scorpio Tankers was upgraded today by JP Morgan from neutral to overweight. They have moved their target from $29, which you can see it tested already, up to $34. So they're looking for a breakout above this area of overhead resistance. I do see a flag formation here, which is a bullish pattern, and you do have a very short-term breakout that could turn into an execution of this flag pattern. But I don't like that PMO sell signal right now. It is really strong with the scooter, so maybe we could see higher prices coming out of this, and the PMO would just find its way to unwinding if we get more of that consolidation type action like we see in that flag. All right, now let's go ahead and look at some downgrades. Duke Realty Corp was downgraded today by B of A Merrill from a buy to a neutral. And they didn't set any targets for me to share with you. But you can see we're trying to make a nice little breakout here above overhead resistance. It's formed at the tops we saw back in March and April. Unfortunately, even if we get that breakout, overhead resistance is pretty close by right here at that 3150 level. And if we look at it very quickly on the weekly chart, there you go. You've got the sell signal on the PMO, and look at this gap right now so far, and it is Thursday. We could see a gap down here on the weekly chart. I don't see any really nice support until you get down to that 130 level. So hang on. If you've got this, I would be out, but I don't know. We'll see where it goes from here. And now Owens Corning, which was downgraded today by Nomura from a buy to a neutral. They changed their target from $70, which you can't even see on the chart, all the way down to $48, which is about where it's at right now on the downgrade. So they moved it to neutral, so I suspect they're just not expecting it to do much, maybe staying in the trading range that we have here. PMO sell signal, you've got confirmation on this decline that we probably will see it come down and test that $44 level. And that's all I have for upgrades and downgrades. Here is the summary, and I will have that up in the Market Watchers Live recap like I always do in the evening. All right, Tom, I'm going to pass back to you. Get started on our dissection.
Yeah, we're going to dissect the Nasdaq 100. I just want to show you something very quickly. If you're not familiar with how you can get all of the components of an index inside a chart list here at StockCharts. And by the way, do also want to mention that you have up until Monday to extend your membership. So please don't miss out on this opportunity. If you extend a year, you'll get an additional 2 months added in. But this is just one of the things you can do at StockCharts. So I'm going to go in and just click on this new scan. And it comes up with the default greater than 40,000. But when we're looking at the Nasdaq 100, I can guarantee you all of these stocks are going to have a volume over 40,000. So I'll just leave that. But down under the indexes here, if you would like to choose an index that you would just like to have the components in a chart list, I just click on the Nasdaq 100, add it, and then we can check the syntax, which is a good idea before you run into your scans. Everything's fine. So I'm going to run the scan. And there they are. And guess what? Shocking. Matching results 100. So we got 100 of them. And so now I can save the list. So I can put them in a new chart list. I already have a chart list that is for the Nasdaq 100. So what I do is I just replace an existing chart list. And I do this every once in a while because there are changes to indexes, especially the S&P 500 or the small cap index, that sort of thing. But I can go down and now and I can grab my Nasdaq 100 components. And so I'm now going to overwrite that existing chart list with this new result. So that will make sure I have the latest. So I click OK, and I should come up with my list, and there they are. So there, now I've got 100 stocks, 100 Nasdaq 100 components right in a chart list that I can now sort. Here's the scooter rank. So I can sort it by scooter rank. And what we're going to do is, obviously, we're not going to have time to go through all 100. We'd probably bore you to death going through 100 stocks like this. But I thought what we would do is maybe take the top 20 and take a look at those, and then we'll go through and look at some of the bottom ones as well. But Erin and I are going to break these down. She's going to take the first 5 on the list, starting with Qualcomm. Then I'll take the next 5 and so on, and give you our thoughts on some of these charts. So Erin, why don't you go ahead and start with the top scooter ranked Nasdaq 100 stocks, Qualcomm on top.
And away we go. I did just put it in a candle glance really quickly for everybody to see, but I'm going to be, of course, looking at the actual charts. But if you were to put these in a candle glance, I think you'd find very quickly which ones were the top 10 that I'm looking at and the lower 5. All right, so Qualcomm, of course, is the strongest scooter ranking right now at 99.2 for the NASDAQ. You know, it had the nice run. It put that PMO in very, very overbought territory. We're now starting to see some consolidation sideways. I would look for a continuation of that to get this PMO out of that overbought territory. We've got the strong scooter. Volume is looking okay at this point. So I would look for a possible move in this range. If we got down a little bit lower on that 20-day EMA, or just really right here, it doesn't look too bad to go back up to the upside. Notice it's pulling way back right now, so could be an opportunity. Cadence Design Systems, 99.1 on the scooter ranking. Not the best chart as far as the PMO is concerned, although if you look in that thumbnail, it is starting to turn back around on this short-term breakout from that declining tops trend line. It's you can see it right here, that declining trend in the thumbnail. And we're working on getting a breakout above the May top that has been set so far into the month. Looking at nice OBV volume, I would expect a breakout here. You do have a over 2% move today, so maybe you might want to wait for a little bit of a pullback there, but cadence looking pretty good. All right, nice breakout right now on Mercado Libre. This one is got a scooter of 99. Looking at the PMO buy signal here, which looks great. Breakout right now from the top that we had already set here in May. Looking pretty good, and I would just take a quick peek at that weekly chart, just so you can see the strength will generally translate, since the scooter ranking is based mostly on intermediate to long-term calculations. And right now you can see the PMO is now reaching above the previous top that we saw in 2017, rising strongly. Doesn't look like it's ready to turn back around as of yet. All right, next one, our number 4. Workday, W-Day, and there you go, scooter 98.9. OBV obviously moving sideways through this consolidation. Nice breakout today above that April high. And you have a PMO that is just going on a buy signal. We got the little fake out move here, actually whipsawed a bit, but now we've made that straight up move straight through the signal line. I think that's looking pretty good at this point. Notice bottoms rising on OBV, and that declining trend on the OBV is being broken right now. So Workday looking pretty good. Align Technology, number 5, scooter 98.8. You've got the PMO turning back around after the sell signal. Look at that really nice short-term breakout from that declining trend. And we're already trying to trade above that previous May top. This gap was filled long time ago, and it does look like we're going to move up here and test the highs we had back here at about $400 here. The area of overhead resistance to watch right here, right about where we are at 340. All right, Tom, your turn. What are 6 through 10 looking like?
All right, first is Dentsply, X-Ray, XRAY. A couple of gap ups here recently, earnings related. You can see one back beginning of March, another one in May. I think the relative strength here has certainly picked up on the stock and in the group in general. Medical supplies just recently broke out versus the S&P 500 to about 6-7 month highs. So you got a nice industry group that normally performs well, by the way, through July. The medical supplies tends to continue to strengthen from now through July. And this is one of the leading stocks in the space. I think we might see a pullback at some point. I was looking at the relative strength here on X-Ray. We got up to where we were 2.5 months ago, couldn't get through. So maybe we consolidate, might be able to get this one on the 20-day moving average, but I do like X-Ray. AMD, this one has been performing really well again, which I like. And I remember talking about this, the fact that AMD relative to the semi group was strengthening in May, even though the overall group and AMD went down, the group clearly went down, but the relative strength was actually picking up, very similar to what we saw with Cisco and the telecom equipment companies. So I think you've got a really nice leader here. We're getting a relative breakout to about a 7-8 month high now on advanced micro devices relative to the semiconductor group. I believe short term we're going to make a run up here for 30 to try to get through that April high. Ultimately, I believe we're going to make that breakout above the September high of last year. So I think this one is one of the top scooter ranked stocks in the Nasdaq 100 for a reason. This is one that traders like. It's performing well. I expect it'll continue to do well. Third is Synopsys, SNPS, breaking out today. Could use a little bit more volume, not horrible volume, but by the end of the day, I'd like to see it at least over that 1 million share mark to confirm this breakout. I'd be careful short term if we fail on this breakout and leave a tail above the earlier high in May. But the way it looks right now, I think looks pretty good, especially if we get that close. But you can see software moving higher. Synopsys, one of the better software stocks, has been performing very well versus the group. And this chart lines up exactly the way I like to see it on these relative charts. Everything pointing up from left to right. So can we get the breakout? Is the volume going to confirm? Those are probably the two biggest concerns I have. And those are short-term concerns, not long-term. Next up, PayPal. I mentioned earlier the financial administration space. Look at PayPal making another breakout today. So when you see the group start to strengthen, you want to start to look for the leaders. I think this one's pretty clear. PayPal has been a great leader for quite a while. After consolidating for months, Once we got that breakout and we started showing the relative strength, turning higher again, this has been a great place to have your money. PayPal, I think, continues to look good. And then number 10 on the list is IDXX, which is IDEX Labs. I have a problem with this one only because it is now hitting long-term resistance. Well, long-term in the sense 10 months ago, that's long-term to me. If we can get through and close above it, obviously that would be very, very bullish action. It is another stock that's performing well versus its peers in medical supplies. So it's got everything looking good here. Just being a short-term trader, I would take profits near this 255 level. I think this is the level I want to actually see it get through. The other possibility here is that we get a false breakout over that earlier May high at resistance, and I believe we might have a negative divergence. Well, divergence isn't too bad, but if we get a false breakout, I wouldn't be surprised to maybe consolidate back to that 240 level. So all those stocks I think look really good. It's just a question of whether or not you want to chase them at this point or maybe look to enter with a little bit of a pullback. Back to you, Erin.
All righty, let's see what is next. I'm going to go to Autodesk. It is kind of fun to look at these because they all are showing the strength because they are at the top of those scooter rankings, and it's very interesting to see how they're playing out right now. Autodesk looks really good right now. You've got the PMO turning back up, scooter of course 96.7. And the only thing I was a little concerned about was the declining tops on the OBV, but with this really nice breakout, and it started actually yesterday from a bearish descending triangle. Anytime I see a bullish conclusion to a bearish pattern, I always consider that especially bullish. So your overhead resistance, however, is lurking very closely right here at about, it looks like about 180. So unfortunately, the overhead resistance is right there, but given the PMO turning around and that really strong breakout, I think Autodesk still looks pretty good. I would be holding it. VeriSign. 95.3 on the scooter ranking, very similar chart. You have that short-term breakout. Overhead resistance in this case is about 205. I think the PMO looks good. And notice on the OBV, though, you've got rising bottoms. I think that is especially positive. And if you look into the thumbnail here, we've almost reached that previous OBV top on that spike we had earlier or late in May. So I think that's especially bullish as well. All right, next up is Paychex, Payx. All right, so again, another nice breakout. You can see that the PMO is now got the buy signal. I know this looks like a pretty negative setup here, right? The PMO has been moving slowly lower while price has been moving steadily upward. This is actually a really great way for the PMO to become less overbought, either through sideways movement, typically, or you can have price rising and see it oscillate lower if that acceleration is just steady. And that's what will flatten or make your PMO move a bit lower. I like this buy signal on the breakout. I think it's looking pretty good here for Paychex. A lot of these, though, are really hard to make the move to get in because they've already kind of made their move as it is. So, all right, Lam Research is the next one on, and I'm going to take this into annotate mode here because I'm wondering, right, are we getting that breakout to the upside here? I would say yes. Tried to yesterday. It did actually close, it looks like, above that declining tops trend line. Looks we're trading above it now, and we'll see if we can close above that. PMO is on the sell signal, so we're starting to see a little bit of weakness as far as the charts are concerned. But this is a great area of support. And you can see with those tops and those lows, made the bounce off of it, came in a little bit lower than these tops and bottoms, enough that, that break below the 50 probably took out some people that were, they sold. And now it looks like it's going to make its way back up to that 210 area. So I'd be watching this one pretty closely. Next one up, let's see, is Cerner. Corporation. All right. PMO, you know, it looked like it was going in for the sell signal, but it did not. It's turning back up. It's very overbought though, but it's hard to argue when you see, look at the, you know, the kind of volume that's been coming in, that big move on the OBV. I think we might be getting ready though to pull back here. And why is that? You know, we've got this exceptional volume that has come in here. The OBV is moving very quickly higher, yet we're not getting the movement out of price. That's a reverse divergence. You know, you should be looking for volume. Price should follow volume, they say, and it's not really here. And so that is always something to keep in mind, in the back of your mind. But we could be looking at a flag here. We do see a breakout going on right now on Cerner. So, you know, it looks like it could continue back upward. I just, seeing that PMO so overbought, that would be my concern. And then, like I said, that really nice positive volume doing pretty much nothing per price here. All right, Tom, your turn. You are up. Numbers, let's see, 16 through 20.
Yeah, I'm going to take a look at the next one. I want to explain a couple things to everybody who maybe, if you're new to the scooter score and you're not quite sure what's going on. I'm going to take a look at JD.com and talk a little bit about how this scooter is determined and what this means. You may not understand what we've been talking about. So on this chart of JD.com, what I ended up doing was I put the, if you look down here at the bottom of the chart, I have a 50-day EMA and a 200-day EMA on my chart. And I also put in the rate of change last 125 days and the rate of change last 20 days. If you go into Chart School and just type in scooter, SCTR, you'll be able to pull up an article that explains how this is calculated. But this was developed by John Murphy, who has been doing a lot of work, technical analysis dating back decades. And I think it's a really unique and somewhat simple calculation and ranking system, just taking into account how far a stock is above those two moving averages that I told you, the 50 and the 200-day moving average, and looking at the rate of change. Now, 90% of the scooter score is based on those four things. How far are you above your 50-day? How far are you above your 200-day? What's your rate of change over the last 125 days? In the case of JD.com, this stock is up 37.49% over the last 125 days. That's a pretty strong move to the upside. If you look at the rate of change for 20 days, it's only 3%. But again, you factor all this in and then you compare it to its peers in its market cap group. And so that's how the ranking is done. Now, when you look at a longer term chart on JD, I just did 3-year weekly. You look at it and you say, wow, this one's ranked above some of the others. It's, you know, still $20 off the high back in early 2018. Well, again, you have to, no matter what system you use, you have to understand the ranking and how it works. So if I looked at a long-term chart, I never would have thought JD.com would have been up there as high as it is. But again, understand what goes into these scores. And you'll see JD has made a big move over that 125-day period. That's 30% of the score. How far you are above your 200-day EMA is 30% of your score. So again, just wanted to point that out as I go through these next several stocks. Okay, so JD, looking at the relative strength. First of all, and I'm going to actually pull that chart up. Let's do the 1-year relative strength chart. We're trying to make a breakout. I'd like to see it get through because JD has not yet broken out versus the broadline retailers. Of all the stocks that are up high on the scooter list that I've seen so far, the ones Erin's talked about, the ones I've looked at, I think this is one of the weaker ones. Because again, that longer term picture wasn't great. And then when I look at relative strength, I'm not overly impressed. The group has been strong, but this hasn't necessarily been one of the better stocks in the group. So I give JD a little bit more of a neutral rating. I thought this would be a good one to explain that scooter, you know, how it's calculated, because JD doesn't really meet that eye test that some of these others have. Okay, Celgene. Let's pull up Celgene. Look at the big move back up in January. That's what created a huge spike in the scooter. The stock continues to perform very well, though, relative to the biotechs. So Celgene, you can see the last 5 months been going up versus the biotechs. Thing holding this stock back is the biotech group itself, which has been trending lower. If we could ever get a move back up and clear that 1950 level, I think maybe the biotechs be ready to run. They do like the summertime seasonally, so something to keep in mind. Next up, Facebook. Wasn't a big fan of Facebook for quite a while, but technically it did have a change of character, started to trade better, and I think that earnings report really turned the tide here for Facebook back to the upside. So now you've got the internet stocks moving up again, and Facebook just recently broke out to about a 10-month relative high versus the group. So I think Facebook is doing pretty well again, held the 50-day moving average, which has been its support throughout 2019, starting to move higher again. I think Facebook looks good. Cintas, CTAS, another one trying to make a breakout today. Can we do it? I don't know, but given what the market just went through, look at all those hollow candles. I see accumulation written on this stock. I believe we're going to break out. I like the relative strength, and so I believe this one belongs right where it is, near the top. And, of course, Microsoft. Let's see. Yeah, Microsoft is the last one I have here. This one, you're in the software space. Microsoft's a leader. Microsoft's been performing great. I think this is a staple in a portfolio. I think Microsoft looks really good, and I would not be surprised to see a breakout coming here. All right, Erin, we're going to switch now. We're going to go to the bottom 10, and you get the bottom 5. And these 5, by the way, coincide with the poll that we're going to talk about in just a minute. So you all have an opportunity to go in and vote on which one of those 5, if you had to hold your nose and buy one, which one would you buy? And Erin, you get to pick, and I'm going to give you my pick after you're done. But what do you think of these bottom 5?
All right. Well, obviously they are pretty stinky, less than tasty, taste terrible. And what you're going to notice when I go through these 5 charts is almost all of them, I need to go to a weekly chart in order to see support levels. This is the first one, and that's Mylan. The only good news you can really say about some of these is that the PMOs are really oversold. And so they're setting up where they could make that turn to the upside. But like I was saying, you could still see sideways movement and not get much effort out of the PMO. We saw that back here, but honestly, it just didn't turn into a whole lot here. It's a pharmaceutical, of course. So let's look at the weekly chart because, like I said, I like to see where my support and resistance levels are, if possible. Well, $20. Okay, we're testing 2012 lows, and I still don't see the kind of support that I want. So I'm actually going to go to a monthly chart now. There we go. And we're going back to the 2000. Okay, and now we can finally see some support levels. But the fact I had to go all the way to the monthly chart to do this, and if you look, we broke through a really important support level this month so far. So, you're already sitting in a bad place. Here's this would be a shorter term support level at about 15, which is a possibility. But, this is just pretty ugly here. The PMO is continuing lower. We've seen it go lower back here in 08 and 09. So it's certainly not out of the question that it could continue further down. But wow, Tom, I had to go to a weekly chart or monthly chart just to see something on Mylan. All right, Tesla, we're going to start daily charts on these. Tesla obviously having hard times. Think about this. Most of the market hit the bottom in December after a really bad low. Obviously you can see Tesla got hit too right here. But what's happened since then? I mean, it's really just been moving downward. And now we broke down below some important support levels back here. And like I said, I need to go to the weekly chart now to get a feel for where support lies and what's actually been happening here. And let's go quickly there. Okay. And there we go. Broken support over the past couple of months. Now we're trading even lower than that. Where's the next level? Wow, I would say down here at about 180, and I would start looking for that. I don't see Tesla making much of a rebound. And it's so funny because it's been sitting at the top of the charts forever, you know, of the scooter ranks. All right, Kraft Heinz. This is the only one that if I had to hold my nose and buy, this is the one I would pick. The PMO actually looks like it's been in recovery. It has been rising. We haven't got a lot going out of price, but at least it is rising. And, you know, volume has been pretty much, you know, after the big decline here. Trying to remember what that was on. I know we talked about it. Let's see, the weekly chart though, let's go there. Weekly chart, see, we have PMO is actually turning up. Of course, you've got this, you know, reverse flag sort of hanging over your head here. But support levels, and as far as the weekly chart, we're getting ready to challenge 2012 lows if we get down to that 2750. Need to hold that support level. But I feel like that one was the only one that really was at all interesting to me. You know, Walgreens Boots, not too bad on a PMO buy signal, not doing much with it. And again, we have to go to a weekly chart to find support levels. And you can see right now it is sitting on a very important one. It needs to hold this, and it keeps trying to break below that. PMO very oversold, but still continuing lower. And finally, just a little bit of time here, Biogen. It's also on the buy signal. So you might wonder, well, why didn't you pick that one? And really, it was a matter of the weekly chart. You know, it's a reverse flag, like we just saw on Kraft Heinz, but the PMO is heading lower, slowly decelerating and very oversold. But this is one I wouldn't take a chance on, but it is holding that very important support level at about 205. All right, Tom.
Okay. I'm going to go through these other 5 stocks first, and then I'll give you my pick on the 5 you just went over.
Awesome.
So let's take a look at the 6 through 10 worst scooter scores on the Nasdaq 100. First one is Cognizant Technology, CTSH. And what you're going to see on a lot of these charts as we go down is the relative strength. Remember the ones I was just looking at that were top rated? If you look at a relative strength chart, they're all heading in the right direction. A lot of these are not going to look so great. So Cognizant, as you can see, on a relative basis, just breaking to new 52-week relative lows. Volume, huge to the downside, big gaps, big sell-offs. And this has been in a very bullish 2019 market, with the exception of, you know, the 1 or 2 weeks where we had the trade war scare. But this has been a good year so far. And yet CTSH has broken to new lows even beneath the December low. Not a chance I'd be interested here. NVIDIA. Do want to mention NVIDIA reports after the bell today. So keep that in mind. Earnings coming out. This one, it's been one of the weaker semiconductors. Maybe they'll have some good news for the market after the bell, but it's not suggesting anything at this point. I think there's a big cloud still hanging over NVIDIA in terms of technical. You know, here was the big gap down back in November. We never could get back up through the gap resistance, didn't even test it before we started to roll back over. Can't get through the 20-day. I don't know. I'm just not liking the setup here. And then, of course, with earnings coming out, I'd need to see something coming out from the company and then see some positive reaction before I'd be interested here. Baidu, another one that will be reporting after the bell. And you can see the stock just broke to a new low, taking out the December lows. So once again, here it is. The stock is in the internet space, which has been doing very well. Internet has actually been outperforming the S&P 500 for about the last 6 months. And yet Baidu is underperforming the S&P and wildly underperforming the internet group. So nothing really that I'm going to like here with Baidu. REGN, this is Regeneron Pharmaceuticals. Stock was actually performing very well relative to the biotech group until a little more than 2 months ago, maybe 10 weeks ago. Not only has the relative strength been poor, but look at the volume on the move to the downside. I think this one's still got lots of issues. Nothing here I'm going to be too excited about. And then the last one, Symantec. I would have been okay with this one until it just came out with its earnings and gap back down. Big reason why I don't like to hold stocks into earnings. I would have thought this stock, being in the software space, holding its own relative to the software group, which isn't bad when you got a group that's been going up like this. Just going along for the ride is a pretty good thing. But they disappointed with their earnings again. Another gap down. We've seen this before. Gap down with earnings, gap up with earnings, gap up with earnings, gap down with earnings. This stock doesn't seem to be able to sustain its move to the upside, even though it is in a great group. So software, maybe will help lift this stock. Rising tide lifts all boats. But this one seems to have a hole in the bottom. So I'm not going to go with Symantec. I'll just stay away from all of these lower scooter rank scores. Now, one thing I think this illustrates, Erin, is how good the scooter does in terms of ranking these stocks. When we look at the charts, the ones that are ranked high are solid stocks. They might be, when you look at the PMO, maybe they're starting to look a little toppy, but can't argue with their relative strength. They've been very, very good performers. And the ones with the low scooter scores, not so much. So for somebody who doesn't have a lot of technical knowledge or, but still wants to get a general sense of a good stock to own, I think using relative strength in scooters makes a lot of sense.
Absolutely. It is interesting, isn't it? The huge difference between the two.
Yep. Before we pull the poll up, I don't want to do that just yet. There's what we talked about. I do want to show my charts on the 5 that you talked about and that are in our poll. So let me go through and get those first set up. And I also looked at a long-term chart, by the way. So let me pull these up, and then we'll get the poll up.
Yeah, I think, like I said, you kind of had to.
Yeah, there was nothing on a short-term chart I was going to like. And I'm struggling to find much on a long-term chart, to be honest. All right, Mylan, no thank you. PPO, and PMO too probably. PPO lower on a monthly chart and accelerating to the downside on heavy volume. No thank you. I got to at least see some hope somewhere, and I'm not seeing it yet with Mylan, so I'm going to pass on that one. Tesla talked about this one last year. Never could get through that 380, 390 area. I wanted to get a confirmation on that. It held, resistance held, and then when we came back down, the support around 240, 250 failed to hold. And so now we have just broken to a multi-year low, and this is not on light volume. The weekly PPO just turning negative for the first time since the initial recording. So I think technically Tesla looks as bad as it has since it's been public. And that is not something I want to try to tackle. Kraft Heinz, very similar. Look at the monthly PPO continues dropping, very heavy volume. I see bear flag. I don't really see any major support. I'm passing. I'm going to go to Walgreen Boots. This one just broke beneath this low. You can see the failure on the weekly PPO to turn positive, all coming during a good market. It's going down. No, thank you. I'm going to pass on this one. So by process of elimination, I'm going to go with Biogen. And I'm going to go with Biogen. PPO doesn't look good. We've seen this before, though. We saw it back in 2016. Looked pretty weak, down below the moving averages. PPO went negative, but it turned in the middle of the year and moved back to the upside. Here we are back down at those lows. I think we're at a key support level. So I can make an argument we're in an uptrend, sideways consolidating, holding support. And the final thing is the seasonality on the biotechs. If you look at the biotech seasonally, last 5 years, look at May, June, July going up. And then if you go back the last 20 years, look at July. June, not bad either. So I think seasonality is going to help the stock. Price support, I can make some arguments for Biogen. So that would be my pick of the 5, and it would be the only one that I would even be considering.
Okay.
So let's see what the audience picked, and let's move on to that poll. Oh, we're up there. We're both up there.
Yes.
All right, cool. Funny. That is 1% on Mylan. 1.
Our producers probably put that in there just so that it would be 1.
Yeah, I mean, that's going to be a tough one for me. I mean, Mylan, I guess if you're a value investor and you just see the stock has gotten hit so hard now, it is a defensive stock, or at least it's supposed to be. It's not defending anything except making money. But yeah, this is a stock that's in part of that pharma group and just doesn't look good to me. I don't know. Not a fan of Mylan.
Yes. But yeah, Kraft, that's cool. It's probably your fans and my fans, right?
I don't know, because that's not really the way I look at charts. I mean,
no, of course not.
A monthly chart. How often have you seen that?
Oh, like I said, the fact I had to go to a monthly chart on Mylan, it was, that's
not good.
Not good. All right, but 10 and 10, and I actually do have an RRG because, you were chit-chatting about your charts, so I figured I would put those in. And here we go. Mostly in the green. The leading category were chosen. We only had 2 that came in the lagging category, but notice Tapestry is starting to head back up and out, so I definitely included that one. But our first one is Glue Mobile, GLUU.
Yeah, Glue I think is interesting because so far it is holding where it needed to hold, and it's starting to turn back to the upside. So looking at this chart, I think if you follow these lines, so on the way up, we clearly had established the top at about 820. And then on the way back down, after breaking out, you can see on the way back down, we were holding at about 850. So I look at this 820, 850 area as pretty important. Now, the volume picked up and we lost the trend line. This could be the start of a downtrend, and what we could be seeing is a topping head and shoulder pattern developing. Move up to put the left shoulder in, neckline, back to the head, back to the neckline. This could be a final bounce, maybe to the 20-day. I would draw another line in here, maybe. Let me annotate, add one more line. Because that recent high right here, after the big move down on volume, started to recover, and the sellers came back in again. I think 960, 970, just as we come up, potentially, if we can get there, and test that overhead price resistance and the 20-day moving average, which is declining, that's going to be a telltale sign for me. But that could be a right shoulder, and I would really, if that happens and we can't get through the 20, I would be really careful. I actually think that this is one that if we got back to 960, I think I'd sell it. I just don't like the way this is setting up. I don't like that volume reversal, losing trend line, going back all the way to test the support. Again, this is starting to look a little bit like a neckline to me. So long answer to a very short question, but I'm going to pass on Glue.
All right. And the most popular in the chat room, and amazingly, if you think about it, we did not look at it when we did our scooter review of the Nasdaq 100, and that would be Apple.
Yeah, that is interesting. I guess the recent move to the downside took it down far enough where it just fell outside the 20. But yeah, Apple gap down. I'm still okay with it. The recovery here has not been strong. I think that this is one of the stocks that's going to be hit very hard if the U.S. and China doesn't come through with a trade deal. You saw the volume pick up on the selling, a lot of gap downs. There's a lot of folks not overly excited right now to be holding Apple, given the uncertainties with the trade war. Long term, I love Apple. Short term, I think it's dicey. I think there are a lot of other better ways to deploy your capital. And I think from a trading perspective, just annotating what I think is important, I think if we get back up and test gap resistance and that declining 20-day moving average, I think that's going to be really important, because this is where we had gapped down from. Very heavy volume, 60 million shares traded that day. And now we're starting to recover, but you got moving averages, gap resistance. I think that I'm going to say 195 to about 197 area, I think is going to be critical for Apple. I'm not going to be too much of a fan until we can get through.
All righty, let's see the next one up. Also popular, MDB. And they said breakout of a declining trend channel on big volume. PPO crossed above the signal line, and the PMO is about to.
I'm sorry, what was that?
All of that. MDB, Mongo.
MDB. Yeah, I like this one. I like it a lot, actually. I think that, first of all, it's in the software space. Already talked about that quite a bit. It had underperformed a little bit after gapping up. Look at the volume on all of these hollow candles. That to me is just screaming of accumulation. Comes back down for the most part on lesser volume. This probably panicked some folks because it went below. But I always watch the opening price on the gap up and the intraday low. So normally what I'm going to look at is that level and this level as key support. We came right down into that area, printed a reversing candle. That's a piercing candle for those of you that are candlestick fans. Off of a downtrend, that's a reversing candle. We have been holding this area ever since. I think we're moving back up. I believe we're going to challenge that level and eventually break out. Look at the volume coming back in on this move to the upside. I think MDB looks good. Wouldn't be a buyer here because I think your reward to risk isn't justified at this level. So I'd wait for either pull back to the 20-day or I'd get it on a breakout.
All right, let's see. Next one up is Wix.com, WIX. Not as good a looking chart.
Yeah, Wix just reported earnings, gap down this morning below the 20-day moving average. It's been a nice performer. Not sure. Well, let me look at it real quick and just see if there is a negative divergence on this move. Yeah, it's been trying to go higher here. You can see the PPO rolling over. I think we could get a 50-day test, which coincides with what I would say is very good price support. So let me annotate the relative chart here. But there was a top, and then this is a top. So that's a couple of key areas that I'd be watching for. And you can see the 50-day coming in right in the middle of that. So I think if we got a pullback into that area, that's where I would be looking for entry. I think now that the earnings are out, I think some stuff was already built in. The fact that it's pulling back, I think maybe you'll have a shot at 126. If not, I'd wait and see if I get it on the breakout.
All righty. This one looks this one looks good. SEC Limited, SE. Nice breakout.
All right, SE. Yep, another breakout. I like that. Volume's picking back up again. That's good. It's been a relative leader. The group relative to the S&P, not so much. So that just means I want to make sure I got a tight stop. So if I was playing this breakout, I'd keep a tight stop at one or two of two areas. Either the breakout level, which in my mind is right at about that 25.75 area. That's where we opened today. So maybe a close below there. Or if you wanted to give it a little bit more room, I'd use that rising 20-day, which was holding right in here. And that comes in currently at about that, what is that, 24.84 area. So that would give you a little bit more room to the downside. But I like the stock. I think the stock looks really good. And if the group begins to outperform, I think this is a stock that could really move high. So I agree with you, Erin. Looks pretty good.
All right. Let's see. Next one is Tapestry, TPR.
Yeah, TPR had gapped up, came all the way back down. And I think I was talking about this one the other day. I really like this holding. Actually, it moved intraday below that prior low, which should have triggered more technical sellers. And instead, it closed back up above the support level. And you can see the last couple of days now, hollow candles. I think this one's got a shot to make a run for 36. I think the downtrend could have been pierced with that gap up and the heavy volume. We went back down, filled the gap, tested support, starting to turn back around. So I think that this is a stock that is currently in a trading range between 30 and 36. And I wouldn't be surprised to see it back up at 36.
Yeah, I have to say I do like that chart as well. Next one up is SAFM, Sanderson Farms. I'm not as big a fan.
Yeah, it's been performing pretty well, probably a little extended, although I will say that it has been a great trading candidate every time it hits its 20-day moving average the past 10 weeks or so. So that's good. I do like the fact that the group is starting to strengthen. We already had a pretty strong stock on a relative basis, but the group is beginning to strengthen, and that's not going to hurt. So I'm actually okay with this one as long as it continues to trade the way it has, which would be holding and bouncing off of these 20-day moving average tests when we get them. So not bad. I'm okay with Sanderson.
All right, here's another one with a pretty breakout in the full line insurance group, HIG, Hartford.
Yeah, financials, I'm thinking could really start to move, and especially if the yield that we're seeing today moving up, if that continues, that will help the most of the insurance group. You've got an industry group that has clearly moved into an uptrend. I think that's reversing this downtrend. So I think this is a good group, and now you've got a stock that is outperforming the S&P, although it has not been outperforming its peers, but it's been holding its 20 days. So I kind of like it too, Aaron. I like this breakout, and what the chart tells me is that there's probably some others in this space maybe that are better, but I like the breakout. I'd like to see a little bit more volume on the breakout, and the recent 20-day tests continue to hold. So I could go down and draw all these lines, all these arrows, but you kind of get the picture looking every time we pull back, hit the 20-day buy or step back in. As long as that continues, I'm fine with it.
All right, let's see. The next one I'm going to give you is ON on semiconductor.
Okay, on semiconductor. Yeah, it's been drifting lower. I'm not a big fan of this relative weakness that we have been seeing right there. That's a big concern of mine. So it's underperforming the semi group, and the semi group has not been very strong, obviously, because of the trade issues. So you can see that. If I was going to go into a semiconductor, I'd be honest, I would go with something like AMD, which has been a really solid relative performer and continues to remain in an uptrend. I think to me, this looks like a bear flag. We've got a straight down move sideways. The market's been bouncing beautifully. ON is doing nothing while the market's bouncing. That tells me that we've got some potential weakness here. So if it were to break below the low we saw earlier this week, I'm out for sure.
Okay, let's see. And our last one is going to be a pharmaceutical, Marinus Pharmaceuticals, MRNS.
All right, a couple problems here. Number one, the pharmas relative to the S&P continuing in a downtrend. So that's, looking at this, that would be one thing that would probably keep me out of the stock and probably out of most of the pharmas in general. The stock relative to its peers just kind of flat, meaning it's going on a relative basis. It's underperforming the S&P or doing no better than going flat with it. So I'm not seeing a leader here, and we got a lot of technical issues. We saw a lot of selling back in here, and that occurred from these different levels. You can see the double top here. We got close, couldn't get through. And then you've got all these gap levels to try to get through. I mean, it's just one after another. We're trying to fight through. It's going to need some more volume, and with relative weakness, I'm going to pass.
All right, and that does complete the 10 and 10. Here are the symbols that we just went over. I will have those up in the Market Watchers live chart list probably right after the program. So if you want to go there and steal some of those charts, just go to the Market Watchers live blog under the articles tab, and the link will be there right at the top. Okay, it is time for our special segment that we are running now on Thursdays. Today, in Talking Technically, David Keller is going to talk to us about the MACD, one of those building blocks of technical analysis. Let's watch.
Hi there. So today we're going to look at the MACD indicator, Moving Average Convergence Divergence. This is a classic trend following device. So it's a lagging indicator. It's not going to anticipate a movement in a chart, but it's going to lag behind there. But the idea is markets move in trends, stocks move in trends, and this will help you capture that. So looking at a chart here of American Airlines, we're looking at a daily chart looking back for the last year. And then we have the MACD indicator at the bottom. So the idea is you have the MACD line in black, you have the signal line in red, which just smooths out the MACD line, and you're looking for when they cross up and cross down, and that gives you a general sense of the trends on the chart. The way that this is actually calculated, it's looking at the difference between two exponential moving averages, the 12-day and the 26-day exponential moving averages. All that means is it's smoothing out the price movements over a certain period of time, looking at the difference between those two and trying to identify when they cross, when the short-term trend is different from the long-term trend. So in this chart of American Airlines, you can see a series of bullish signals when it crosses up through the red signal line, and bearish signals where it crosses down. And the general idea is it's not going to hit on the exact top or bottom. It's going to lag behind just a little bit, but it gets you in the bulk of the trend. And a market that tends to trend, you will tend to be on the right side of it. Two other things to mention about this indicator. The other one is there's a histogram in the middle, what I'd call the MACD histogram, and that essentially shows you the difference between those two moving averages. It can be a secondary indication, a measure of momentum. So for example, here you can see as the market went down, as the stock went down in December, the trend is going down, lower lows, the MACD indicator going down, but you can see the MACD histogram starts to slope higher a little bit. That just tells you the momentum is lessening a little bit, so still in a downtrend, but a little less momentum. It can be a little bit of a leading indicator. Now, one other indicator, my other point I wanted to mention, there's another indicator on StockCharts.com called the PPO, the Percent Price Oscillator. And I'll bring that up very quickly. They're very, very similar, and actually they will visually appear identical. So here we're looking at the two indicators together, the MACD indicator here, and then at the very bottom, the PPO, or the Percent Price Oscillator. You can see that visually they look identical, they're the same, but the ranges, the actual values are what's going to be different. See, MACD is based on moving averages, so the values themselves are based on the price of the underlying instrument, the stock or whatever it's trading at. The PPO is standardized, it's based on a percent basis. So using the PPO instead will allow you to make a more apples-to-apples basis comparison across stocks and across assets. Can be a nice additional tool.
All right, before our final market update, I just wanted to remind everybody that we are still running our spring special here at StockCharts.com. If you sign up for a year, you are going to get to add 2 free months onto the end of your subscription and get a chance to test the new ACP, Advanced Charting Platform here at StockCharts. And of course, if you also decide to renew for or start a 6-month subscription, you will get 1 free month. So don't miss out on that. It ends on Monday. All right, final market update time. As you can see, it looks like we might have hit some intraday highs at this point, but boy, the Dow's up over 257 points, or about 1%. S&P 500 is up 1.25%, just about, although pulling back off of those intraday highs. Nasdaq also pulling back. New York Stock Exchange, we're seeing the same thing. One thing I would note is that these intraday tops are coming in below the tops we saw back here on last Friday. So I would have liked to not seen them turn down before making that move, but right now, so far, that's what we're seeing. Also with the Russell 2000, as you can see, hit intraday highs, and it is pulling back, but Russell 2000 is still up almost 1%. TSX, Canadian markets, also up on the day and pulling back off the intraday high, up over 106 points. Treasury yields are higher, currently reading 2.403%. The VIX has pulled back. We're seeing a reading of about 15.5. UUP gap up, now starting to consolidate sideways at $26.29. GLD pulling back quite a bit after the breakout that we saw yesterday, I believe. Yes, we got the big breakout yesterday. And so we're pulling way back. Looks like a reverse flag now. So we'll have to see if gold can't make its way back up into positive territory. USO gap up, hit intraday high, pulling back to the start of that gap, the gap support there. TLT lower on the day, down 33 cents at 125.80. And a beautiful sector summary today. All of the sectors are up. Energy is the, relatively speaking, not performing as well, but it is still up over 0.5%. Materials up over 1.5% are the lead. It is the leading sector. All right, Tom, passing it back to you.
All right. Yeah, I just wanted to maybe take a look at the home construction group, which is part of consumer discretionary. We did have a really good report this morning on the building permits and home starts. And so I think this is a really nice looking chart, very constructive here in 2019. This is a daily, so this is going back 2 years, but you can see the downtrend that we were in. And I had talked for quite a while about staying away from the home construction as long as they stayed below this 20-week moving average. But you can see at the beginning of the year, we actually had a character change, got back through that 20-week moving average, and now you can see that that is holding as support. So any future moves back down, I think, to test that 20-week moving average would be a great entry point. One stock I just wanted to pull up and talk about, Meritage Homes. This is one that has been one of the leaders within that home construction space. It's kind of got all the relative strength characteristics that I like, moving from left to right, higher across the screen. You can see the group outperforming the S&P, the stock outperforming the S&P, Meritage outperforming the home construction group, and you can see home construction on an absolute basis moving higher. So just wanted to point out home construction doing really well with these lower interest rates, still some improving economic reports coming out of the group, and Meritage, one of the stocks I think look pretty good in that space. So with that, let's go into our final segment, which is sector rotation. Erin, let you start. Go ahead.
All righty. I suggested that we do this today because I did get a signal change yesterday, and I was kind of laughing at the timeliness of it, given that materials is up over 1.5% today. But in the intermediate term, we got an intermediate trend model neutral signal on the materials sector. One of the things I just wanted to point out on this chart is for a while, we had mostly green. I think the only thing that never actually switched was the sell signal in the long term on XLE. And so one of the things that I do pay attention with this scoreboard, and I'm actually going to add in the PMO, I think, on my own as well to see what those signals are. But, usually when you start seeing some of the sectors flipping to, a negative signal, let's put it that way, that's usually when we start seeing a market decline start. So I'm watching very closely these signals, and the fact we got that new one for materials concern me a bit. But since I don't have the PMO on that spreadsheet, we can look at the PMOs of all the sectors here on my candle glance. And, really, we're getting a buy signal on real estate right now. We're getting that positive crossover. Pretty much all of these PMOs have turned up. But let's look at XLB in particular because, of course, that's where I got that new signal today. And so you have that 20 crossing below the 50, which is that neutral signal. But we are seeing a rebound. It did hold up at the support level around $54. I'm just, one of the things that's kind of poking its head out at me is a possible kind of a complex head and shoulders maybe forming here. The PMO is negative. It is starting to decelerate as of today with the big move, but I'm still not a fan of that material sector at all. And then if we go back and look at the other signals here, we obviously want to look at energy. Why in the heck is it lagging so much? And here you go. We had a nice move off that December low, and then we executed this rising wedge. And we did hit support, just like we saw with materials. In this case, it's $63 for XLE. And the PMO is starting to turn up. But you can see, this is when I got that long-term trend model sell signal. And it has basically been in place, for months. We kind of came close here on getting that buy signal. The 50 almost made it up to the 200, and then we saw the failure. The fact that this negative crossover on the 20 and 50 occurred below the 200-day EMA, that's why we moved to a sell signal on it. So while, there might be some improvement going on here, we could have, executed about as much as we were going to execute out of this rising wedge. I like to see that rounded bottom there coming in off of the support level. I don't know how much legs we're going to see out of XLE at this point. Let's see. I'll look at one more, and then I'm going to pass it back to you, Tom. I want to go back to our back to the candle glance. So I'm going to view all, and I'm going to select candle glance. And there we are. Let's go ahead and look at XLRE since it is getting that buy signal. I notice there's a buy signal here on XLP though too, but it hasn't actually happened yet, but nice breakout on consumer staples. but I want to look at real estate right now. Really nice breakout. Of course, what looks like a double bottom, but it's a reversal pattern. So that's really, I wouldn't be looking at that as a double bottom. What I would be looking at as a double top that did not execute. I think, again, when you're looking at a bearish pattern and you get a bullish conclusion, that's what I want to see. And now we're getting the breakout here. So PMO buy signal, notice OBV volume starting to really improve here. And that breakout, you can see it in the thumbnail. It's pretty impressive. Nice volume that's been coming in for quite some time on this rally to the upside that really tells me that there's something good going on there. All right, Tom, I'm going to let you take over what you are looking at as far as sector rotation.
Okay, I'm going to do it looking at all the different areas and what's been leading and so forth over the longer term and also over the short term. So I'm going to start off with the technology group. So I'm going to look at it, even though we're going to look at the various sectors and the way they've rotated recently. I'm going to use relative strength charts to help to explain what I think's been going on in the market. Now, the XLK relative to the S&P 500, when we took that turn a couple weeks ago and started moving lower, the technology group was hit hardest. And that's what we expect. When the market starts to move lower, typically the profit taking is going to kick in areas where there is more profit taking available. And I think it's pretty obvious that over the first 4 months of 2019, technology was one of the leaders. So I'm not surprised by that pullback to the downside. But I think all of this, and I'm going to show each of these in short-term and long-term charts, all of this on the 6-month chart needs to be taken into context on the long-term chart. And this goes back 5 years. It's a daily 5-year chart, 5-year chart of the XLK relative to the S&P 500. Now, one thing I want to mention, when you look at the relative strength of technology, we topped in June of 2018. We came up 3 different times trying to make a relative breakout, and we couldn't do it. And then we turned lower. So when the selling kicked in, the fear started picking up, technology, was unable to break out on a relative basis. I think that led to a lot more selling, not only in that group, but in the overall market. Now I'm going to go through some of the other aggressive groups, sectors, compared to the S&P, and I want you to look at when they topped. So technology was June. Consumer discretionary topped in June, and in September, we tried to get through. We couldn't quite make it. Next up, communication services topped in July and then started coming back down. Financials topped all the way back in February of last year and then worked its way lower. And then finally, the industrials also topped in January, worked their way lower. So what's the significance of that? Well, if you look at just the S&P 500 over this same period, look when the S&P, see the S&P breaking out to new highs in September and trying to go higher again in early October. Well, again, if you go back into these individual sectors, we weren't getting support from any of the 5 aggressive groups. So when we now are breaking out in 2019 on the S&P 500, and let's go back to that chart again, long term, when we got this breakout above those highs, I think it's important that the rotation has been to the aggressive groups, mostly. So here you've got technology breaking out easily to another all-time relative high. Consumer discretionary. These are probably my 2 favorite groups too, by the way. I want these 2 groups to break out and be leading the market to the upside. Doesn't have to be both of them, but at least one of them. In this case, we have both of them breaking out to new relative highs. So not only is the S&P 500 going higher, but we're getting the relative strength in key areas driving that move to the upside, which I think is very bullish. Communication services. Now, we're not back to where we were in June or July. Obviously, Facebook, some of the others took a big hit last year, and they're trying to right the ship. But what I will say is that in April, we did move to about a 7 or 8 month relative high on communication services. Financials. Well, as long as the 10-year treasury yield keeps diving, this group is going to struggle. I actually posted a blog article. I'll take a look real quick. I think we have time. But if you go into my blog article from today, one of the things I was looking at was I was looking to see about the financials and can we move higher, or are we going to be stuck for a while? So in the current outlook section, I showed this move down in the 10-year treasury yield, and you can see the relative strength of financials going down with it. Now, over the last month or month and a half, you can see we've been moving higher in financials on a relative basis while we've been moving lower in the 10-year treasury yield. That's very unusual, and you can see using correlation that generally, and this is over the last 2 years, generally the direction of the 10-year treasury yield is the same direction as the XLF versus the S&P 500. But just recently, and for only the fourth time in the last 2 years, we went below minus 0.5. Look at all the times we get up near +1. We stay up there most of the time. So this is unusual to see this moving higher, the financials beginning to outperform when we were seeing interest rates moving lower. Now we've got a double bottom in place, and I think one of the keys over the next couple of months is going to be where the 10-year treasury yield goes, because that is going to impact the rotation of financials, short-term and potentially long-term. If we could get the 10-year treasury yield moving up, getting back through that 260 level, I think we're going to see this relative downtrend break, and you'll see outperformance by the financials. Now, I could look a little bit short-term. Here was the technology group. I could go in and highlight the consumer discretionary, moving higher and then pulling back, but still holding on to the relative breakout level, that prior relative resistance. Hopefully will hold as support and we'll move back to the upside. But my whole point here is that we're seeing the rotation the way that you would want to see it in a bull market. I would be much more concerned if the S&P had broken out and technology and consumer discretionary were still lagging on a relative basis the way they were in October and September and even August of 2018. But that's not the case. I think the market looks good here. Of course, we pulled back on a relative basis during a sell-off, but now that the market is starting to strengthen again, you can see that we're beginning to see some additional strength in these key areas of the market. And again, there's your technology starting to bounce back up again as well. So I think the market looks good based on sector rotation. Let's bring up the summary, and then we will wrap up the show.
Mm-hmm.
So there you have it. Sector rotation. Erin gave you the decision point signals, talked about that a bit. I gave you a little bit of a short-term, long-term view of some of these key aggressive sectors and how I think that they are still rotating bullishly for the market to go higher.
Yes. You know, most of the PMOs, when I looked at it in that candle glance too, were rising. Mm-hmm. So, you know, it's to see the strength kind of carry through to most of the sectors, especially today. Today looks really great for all of them.
Yeah, and you know, you mentioned it during the update, and I talked about it earlier today. I mean, the move to the upside today is really a good one. All 11 sectors are moving higher. I always like to see wide participation in advance. I don't want to see one or two sectors leading, and I think, you know, we have that participation today, which is great.
Indeed.
All right. Well, here is your upcoming schedule. We'll give you just a really quick update on the Dow. It's not quite at the high, but it is starting to move up again. Currently up 278 points. Nasdaq up 101. The S&P 500 up 35, and the Russell 2000 up 15. All right. Want to thank all of you for joining us again today. Please remember to complete the survey as you exit. It's located below your video player. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Thursday afternoon, everybody. We'll see you back here tomorrow. Got Mary Ellen McGonigal joining me tomorrow. Erin will be back on Monday. Happy trading, everybody.